Good morning, everybody. It's 8:02 a.m. Pacific Standard Time, 1:30 of 2013. Yes, sir, and ma'am. Yes, ma'am, and yes, sir. For the traders that we have, we are going to take this position. And basically, it's a 316 2013. It's a $1,500 put on the S&P 500. Yes, it is. You can see that throughout the morning, when we had a negative GDP reading in the U.S. economy, which we haven't had since year 2009. Here, he just bought 400 contracts at $25. Look at here, 214, 107, 107, and 321 contracts. Now, here's a nice thing about this. 4,700 have traded in the first hour and a half of that opening bell. Let me tell you something that is the most realistic thing. It's called wholesale. That's realistic. And you can say it like that. It is realistic because these contracts yesterday on the S&P, the high was $63. That was in the weekly. It's the weekly and monthlies. This monthly one will trade totally different, but the high was 60 and we bought it right down here, $24. They're 24.50 by 25.70. What that means is that from that top high price up here of $63 when I'm buying the S&P, I got to be wholesale. That's what we do. And when you take $63 minus $24, you can get our wholesale cost. That's how many thousands of dollars wholesale that we saved to be involved with the time premium on a $1,500 put that goes to March 16th. This is not a weekly. This is not next month. This is right now for this expiration. This is going to be, you can see people buying 70 more, 35. Those prints just went off at 11:05. Buying wholesale is the right way to go. And when you're buying wholesale, you take a look at the high of $63 and you take a look down here around $24. That's an entry. That's a big wholesale savings. Do the math. Take 63 minus $24. That was the close. And so once you figure that out, MMT, you'll know exactly what the wholesale savings are relative to capital dollar risk. To be involved in an S&P 500 that is right now printing at 1506.26. So you have a lot of weekly options expiration that's going to lead up to the 316 2013 $1,500 put. Yes, there's always risk. This S&P has gone parabolically up in a bull move for the whole month, and today's date is 1:30 now. So you still have the February monthly expiration in here, and then you have the full calendar month of March. However, we do eliminate the risk on the first pass entries here. They can always go a little bit lower. Someone just bought 50 contracts right here. Here's another print, 1106 at 24.40. So we can see that this particular contract is gaining its momentum where people are looking at why the S&P on a weekly chart here, which it is at all-time 2007-11 highs over here. Look at it. Yes, it can still break up. It hasn't tested it to make a fully double top there. But the thing about it is, we're in the calendar earnings season. The bulk of the S&P 500 is going to come out. Not only that, you had negative GDP growth. There's always going to be risk trading index options. The thing about it is having a monthly one in this time frame right around at the strike price, that's almost unheard of. You have to be down here at the very low. Like I showed you before, they were $63 a contract. And to have it right here close within 6 handles of the S&P for a 316 $1,500 put, and the market is overbought and we do get some pullbacks, the risk is still minimal, but there are still a lot of risk because we're in a very strong bull. The thing about the weekly chart, though, when you look at the S&P, is that the weekly chart is up here, and it right now, every bull run has to have a pullback, and that's what we're trading. And that's why we bought some protection on the S&P 500, was that 1500 put right here. Once again, you can see a bunch more contracts. This guy bought 100. Look at here, 1107. He bought 17 of them at $25. He bought 51 of them at $25. There's that timestamp. Oh my goodness, 170 more contracts at $25. And then someone printed 3 little teeny contracts at $24.25. The bigger people are locking in their positions now, just as we are. And the thing about it is, when I give that alert in our option pit, called the S&P 500 Index Option Pit, you will understand that our market maker knows what he's doing. And here's another 78, 59, 39, 39, and 58 contracts. Look at that. Look at the timestamp. That's 1108. That's right now. There it is right now. They're buying up right now. So you will get the market maker option index alert intraday with your buying power, and you will learn how to get these orders, and they will be at the wholesale instead of $63 a contract where people were buried in them. Well, we're up here at an all-time bull breakout, sure, but every bull has a pullback. And when you are going to put a little bit of risk on in here, here's 214 contracts, 1109. He just bought 214 contracts. 25 went off at 24, 17 off at 25. This is what the market maker does. Here we go, everyone. What I would like you to do is go to options trading right there. There's an options and exchange tab. That's our option exchange. You want to click on that so that you can understand why you're going to be in our option pit. Here on the website, as you can see, SMF Options Exchange. Click on it. Once you get there, you have stock market funding, option exchange. Yes, we own our own prints. We own our own pit. And the thing about it is, we'll give you trading capital up to 15 to 1 for equity, sure. But you get 1 monthly expiration and 3 weekly options expiration with live entries and exits. And you're going to have, all you have to do is look at, now here's one time that we made 833% trading the S&P 500. And you can see by clicking on here, these are all live trades like we're doing right now, every one of them. And you can see why the option alert are being in our pit. Our market maker will dispatch the order. You will do what you're told with your buying power when you open an account here. And you'll have institutional per share commission rates with option trader rebates, incentives. You will. One of the things is that the market maker will do all the work. And I want you to take advantage of this right now. Another thing I want you to take advantage of is open an account. When you open an account, you will click on open an account here if you'd like, but most importantly is when I highlight the buying power that we're going to give you, that is for you to make executions with. So on $10,000, we'll give you intraday 15 to 1. That's 150,000 intraday, along with the market maker orders. Our exchange belongs to us, and our price and our limit orders are wholesale. And we are a major market maker in that pit. Now, you can clearly see here where the time factor on the 316 now is in our favor at this wholesale price. And every time that the S&P goes up a little bit, here, another guy just bought 105 contracts, 39 contracts. Look at that. 107, 117. Look at that volume. Look at that volume since I was showing it. Here, let's go over here and look. We left off at 1109, didn't we? 1109. Look at that. 100, 214. They're getting in. Look at here. 1111. That's the timestamp right now. Yeah, it is on 130, 107, 117. Look at that. Look at that. Here, look at that 1112, another 105, 39, 39, 28, 17. Look at the volumes up to 6,997. Yes, we are market makers here, and you need to know it. And not only that, you need to get over there and get in our market maker pit. We own our own option pit. We have our own options exchange, just like we have our own equity sides, the stock pit. That's a different story. But here is the highlight. We will see later in the day. Right now, it's 8:13 a.m. Pacific Standard Time. That is 1:30 of 2013 with 6,997, and you can see the volume, and I've walked you through it, MMTs and our worldwide traders. And let us not forget one thing. Let us not forget that the S&P is an extreme bull rally with negative GDP growth. The top end of the market's getting a little bit top-ended heavy. These are the lowest prices that we can have all our traders get involved here with these live prints going off right now. This is right now, it's here and it's now, and here is the price. So, once again, when you want to put on some risk in a bull run that's due for a nice little pullback, and we're in the middle of this week, but next week will be a lot of die-hard earnings that are coming out, which is okay. Some of them have fared well. It doesn't matter. We have negative GDP growth, and we don't care about that either. What we do care about is where that risk is. They were $63 a contract yesterday in this video. I showed you all the prices. And so when you're buying wholesale, you're removing all of that risk. There are many hundreds and hundreds of thousands of dollars involved in this print. Once again, get involved in the SMF Options Exchange. Sign up now.